What's up, beautiful people? This is Pope with Stock Doctor Trading. I am happy to be in front of you, and this is episode 1 of the Shillionaire Report.
Tyler mentioned of a coming economic hurricane. That's from Jamie Dimon.
Chairman Jamie Dimon.
Jamie Dimon.
Jamie Dimon.
Jamie Dimon is that there's a storm coming in our economy. He actually called it a hurricane.
Mentioned that Jamie Dimon comment, which I have to follow up on. He has some pretty good data there as well. Brace yourself for an economic hurricane caused by the Fed and the war in Ukraine. That's an upgrade from storm clouds. What do you make of it? What is he seeing that you're not?
Well, look, Jamie is an absolute legend, but he thinks like a bond guy. And equity guys are always...
Now, by bond guy, what they actually mean to say is way richer than all of us. Once media, mainstream media, gets its hands on a fat cat institutional investor like Jamie Dimon talking about how he's basically switching course or, flip-flopping from what he was saying earlier, where there's a storm coming. If it's going to get any bigger than a storm, I'll tell you. You can trust me. Yeah, he said that. We'll go over when he said that, why he said that in a little bit. But okay, so once they have, the mainstream media has a story to run with it, they run with it. This is how you know that the narrative is a big theater that's being played out for us to react to. So let's just take a look. I mean, I could have gone on and taken 100 slides of how much information was out there talking about what this dude said. Like, are we seriously just gossiping now at this point? Because, all right, so it starts off slow. He said it, and they start picking up. Dimon, economic hurricane barreling towards the U.S. Okay. Financial stocks slump as J.P. Morgan's Dimon issues hurricane warning. Like this guy's a weatherman. Dimon raises alarm level over recession risk. It's a hurricane. Okay. That's American banker. What do we have? New York Times. Pretty well-known publication. It's a hurricane. Bank chief warn of weakening economy. And it's just article after article. J.P. Morgan CEO warns of economic hurricane due to Ukraine and the Federal Reserve. Well, that's pretty true. Brace yourself. Jamie Dimon warns of a coming economic hurricane that will require preparation as the Fed shrinks its balance sheet. And then, so those headlines get used up. And they have to start kind of escalating the headline, keep it going. Who can make the best headline? Jamie Dimon says hurricane is bearing down on the U.S. economy. Financial Review, that was a fail. What else? Can we do a little better? Brace yourselves. It's an economic hurricane, Jamie Dimon says. That's how all headlines should be read in like serious, like epic movie voiceover monologues. Okay, so I know they can do better than this, though. Come on, what else do we have? The economy is going into the toilet. Let hope no one flushes it. Oh, that's good. All right, what else do we got? Economic hurricane set to wreak havoc on global economy, warns top bank chief. Big fish. And that's the Express. All right, so now we're in like the tabloids. So it's got to get worse than this. How much better can we get? All right, so Brian Moynihan tries to call Jamie Dimon a pussy with spectacular cell phone. All right, so you see what my point is. You see where I'm getting at with this is that they need to just play this stuff out. I mean, this is just TMZ. This is like the Inquirer. This is when we start getting like really dirty. And if you want to see, we can get even lower. Now watch what happens now that it gets out of mainstream hands and we actually have to turn that over to the YouTubers. Now watch how much of this content is available. Is video after video after video talking about this. Let's just say it completely controlled the narrative on Wednesday last week. So why don't we go ahead and take a look at what happened in the S&P 500, for example, when Jamie Dimon said this. Let's pull up the charts. Now that I've got some charts up, we can take a look. You can see today S&P is down right now, 0.86%. Kind of started off hot and faded off a little bit later. You can see we hit some key levels right around here, the 415.5. And it seemed to really break once we hit the 200-day moving average, when it was wrapped up right with the VWAP. Right around 1230 that was, and just boof. Wow, look at that. Look at that, 1220 to 1247. It's like everybody went to lunch. Just pushed the sell button and headed off to lunch. So that's what happened there. But okay, back to topic. That's just current day. So we're going to zoom out here. And we're going to go back in time and take a look. I think we can do this in the 30-minute. Yeah, this will be fun. So this is live right now, chat, but it's at the 30 minutes, and you'll see right here, right around 10 o'clock on June 1st. That's when Jamie Dimon's big statement broke. This is what it meant to the market. You can just see when we zoom out, you can see it was a dip. It hit a certain level. The next day it hit that same level as well. But then when we kind of zoom into it a little bit, kind of get a clearer picture that market was, trying to head up. Jamie Dimon says there's a hurricane. And of course there's a retracement back, which is typical of that sort of thing. Now, did we see a hurricane for the next 5 or 6 days?
Sit on a throne of lies.
Well, the next day the market went up. If you'll see here on the 2nd, we had the kind of opposite of what happened here today so far, and went down in the morning, and then the rest of the day was like, oh, wait a second, this hurricane's not so bad. I mean, I think it's more like the eye of the storm. What I actually think is going on behind the scenes, the actual institutional algorithms and how they're trading, is really what we're talking about when we're talking about liquidity sweeps. And sometimes these narratives seem to play right along with certain times when they seem to hit the go machine go button. He says it's a hurricane. Big market sell-off. You saw all the news propaganda coming out. Next day, market's up. All right, everything's cool. All right, shouldn't have any worries. All right, next day, we come back down. Still trading within the channel. Next day, we pop off early in pre-market. This is leading into June 6th. And, it fades back to the levels that we were at business close the day before on the 3rd, which was a Friday. All of a sudden, pre-market comes up. Algorithms decide they need to sell off a lot of stuff in the pre-market, scare everybody about the hurricane coming from everything that just went down. Everything looked so good yesterday, but it went down. Oh no, maybe the Jamie Dimon's right. Maybe there is a hurricane. So they set you up with that theater in pre-market. And then look what we had. Yesterday was right back to the levels we were testing each time. All right, so now we're about halfway. We're right in that jiggle room today. We're right in between some of the higher levels, the 415s, 416 levels, and some of our lower level channels like the 407.50s, and even all the way down to 407. You can see right there. So from 407 to 416, there's this 8-point channel on the SPY being the ETF that follows the S&P, for those who are just catching up on that now. And what I call that is algorithms looking for liquidity sweeps. So what happens now? All this news was coming out. I thought about making this video last week, but it took me this long to get my whole setup set up and to be able to even produce this video. So I'm coming in, late to the game. So I thought I would add a little bit more to this concept of the narrative, because we all know that shills be shilling. But why they be shilling is what I want to get to the bottom of. Like, what is happening behind the scenes? How are these algorithms playing us? So a big boy comes in on the 1st of June. You can see it right here. And big boy says there's a hurricane. So stock market goes down. Then from there, we just start hitting these levels. And what happens is there's a channel within the channel. And the liquidity sweep, what it tries to do is it tries to grab a volume of sellers or a volume of bidders and drive the price either beyond their willingness to lose, like their stop loss, or drive it down beyond their willingness to lose their stop loss if they're going long or short. So there, you can see when we get into these channels, and we're heavily manipulated by algorithms. Liquidity is low, meaning volatility is up. Volatility meaning the difference between the bid and the ask prices for these things. So there was another storyline going on here. And if we go all the way back, I want us to take a little bit of a look at some key dates and some key things that Jamie Dimon said in the month of May. All right, and we'll compare those to the chart. So first off, you'll have this video right here on the 4th when he was interviewed about how he felt about the economy, the direction of everything going, whether or not we were going to get into a recession. We can review the charts after. Just go ahead and take a look.
Jobs are plentiful, wages are going up, though everything's distorted by inflation and all that, but those are good news, and businesses are in very good shape, and the Fed is going to have to raise rates and reverse QE. And they're going to, if they can, they're going to try to slow down the economy enough so that 8% starts to come down over time. And I wish them the best.
Yeah.
We're a little late, but remember 2 years ago we had 15% unemployment and no vaccine. So I think people should take a deep breath, give them a chance, and I think they got to move. I think the sooner they move, the better. So yeah, they're going to be raising rates.
Deep breath, but
Okay, great. So that was on the 4th of May. Everything was all roses. Now, check this out as well. On that same interview, they were asking him, questions about how his customers can have confidence in what he was doing. And he just sat back like a fat cat, just like, here, just watch the video. All right, check it out.
Next round, if Europe really stops oil and you can really stop oil being delivered, Russia, it can get another 10% down. So it's a tool in the toolkit. It's not definitive. What's definitive is tanks. So we're not. Don't confuse the two. But one is a pretty powerful. The sanctions are a pretty powerful tool.
But if you expect this to last for, I think you said years.
I don't expect it. I said we should be prepared for it too. I don't know what's going to happen.
But how do you see this ending? And actually, if you're a president of the U.S., if you're a president of the Commission, if you're the Fed right now, you need to game theory, and it could go either way. It's like a three-way system. Mm-hmm. So what do you do?
I would plan for all three of them. I think it's a mistake to guess at which one it'll be. It should be all three of them. And I think, basically the Cold War is back. I think the whole world learned something that we always knew, that national security is always the most important thing, but it kind of recedes in the background. We're all doing well. But now it's the most important thing. It should be the most important thing for the rest of our lives. So maybe we all learned that is a permanent state of affairs. The Cold War is back. The allies have to coalesce, and not just for military purposes, but for global, economic, strategic.
Right? And you see what I mean by his whole stature and demeanor? Like, he just sits back and he's like, we're going to be prepared for whatever. We're going to be prepared if it's going to go up. We're going to be prepared if it's going to go down. We're going to be prepared if it's going to go sideways. You're prepared for everything. That's what we do here with JP Morgan. JP Morgan is a big bank. I don't know if you know that, but that's the truth. JP Morgan, big bank. I'm Jamie Dimon or Demon. Sometimes they call me the Hands. Jamie, the Hands Dimon. Yeah, Diamond Hands. That's what they call me. It seems like he's trying to instill a little bit of confidence. Could there be something coming up that would make it so the CEO of a large investment bank might want to inspire a bunch of confidence about a possibly dwindling economy leaking into a recession? Well, yeah. There was a shareholder meeting, and it had to do with his pay and how long he was going to be around for. And guess how it went?
JP Morgan shareholders objected to a roughly $50 million retention bonus. Now, that vote isn't binding, and Dimon isn't likely to give the money back. They have to give that award back to remain CEO until 2026. Including that $50 million retention bonus, Dimon's compensation last year was $84.4 million, making him one of the highest paid CEOs in the S&P 500. A little more pushback on these pay packages, but as we said, not binding, so it doesn't necessarily change the dynamic, but might change sort of how these boards are starting to think about comp in the future. We'll see.
So that happened. So Shillionaire decides he wants to get paid and stay longer at his big bank job. So he says some of the ballsiest things ever. And as you can see from the charts, as soon as he said those things to inspire confidence, the stock market went down heavily. So, you know, it was quite an interesting time. Now, the shareholders said no. And it didn't mean fuck all. Didn't mean anything at all. He still got his bonus. He's still going to stay on as CEO. And I don't know what kind of like world we live in where they're like, oh, this CEO is going to stay on until 2026. Like, what if he doesn't do a good job? Because and I think it's gonna change really, really quickly once this recession hits. So, let's try to understand a little bit of perspective on why Mr. Shill is the Shillionaire that he is. Okay, so what do you think he did right after he got out of that interview on May 4th? What do you think his investment advisors and him did after issuing a, hey, yeah, don't worry about it, even though they were worried about it? They went and sold off their assets. They drove down the market, and when it was at a bottom, they were able to go and rebalance their portfolios, get rid of the assets that were not so good, maybe go risk off and convert everything around to what they wanted for their new portfolio. And then when that was done, was right around here, May 31st. And then the next day, once they've sold off their bad assets for the whole month of May, the last week of May, they went and rebalanced their portfolios. They being the algorithms of the institutional banks and investors, excuse me. The next day, he comes out and he issues his hurricane warning. Can you believe that? Yes, I know you can. And so can I. So because of that, it leads me to the next subject, which is going to be more about algorithmic liquidity sweepouts and how they work and breaking that in. I was going to tie it into this, but I feel like it's going to be more of a long-running theme for this channel. So we might as well stick to the topic at hand, which was Shillionaire number one, Jamie Dimon, the hands Dimon. And the narrative that he just went through. And I think it's pretty clear behind the scenes what they were doing. They were dumping out assets while they were like, everything is rosy in here. And good on them, you know. It's our fault for listening to them. And that's why we're going to have to do a little bit more of this reporting, a little bit more of this understanding about algorithms and how they manipulate and control the price in the markets, whether it's the lit or unlit exchanges. And that's going to be a big topic for us to understand this thing and not get carried away in these narratives anymore. Remember, on the charts, when in doubt, zoom out. All right, people. Thank you. It's been a pleasure. Gots to get this video out now. So I'll catch you on the next one. Peace. And for those who stayed on to the end of the video, I have one bonus. Every video will have one bonus piece of extra information you did not expect. And this is what's going on. Always current, always up-to-date information. So the Federal Reserve, quantitative tightening, they pulled a little trick on us, okay? today is the 8th of June. They told us 8 days ago they were going to begin quantitative tightening, but they had a little trick up their sleeve. And that was that the first Treasury notes and mortgage-backed securities, anything that was going to be expiring was going to happen on June 15th, 2022, coming up in 7 days. And what this means is we haven't even seen quantitative tightening yet. And that was just a warning to the banks. Hey, everybody, get ready. Everybody knows it doesn't really kick in until the 15th. So be ready for the 15th. Catalysts coming up. We have the CPI inflation data coming out. If it's 0.1% over the expectation, you can expect a downturn in the markets. And follow that up with the 15th is when actual official quantitative tightening actually begins. So hold on to your butts. This could get tight, and there's a lot of left of downside that we still have to get through. It doesn't mean that we're not in the eye of the hurricane, where we still are going to have some green days over this next month. But be ready for the negative catalysts and be ready for their bounce backs as well. All right. Thanks a lot. Like, subscribe, comment. If there's anything I didn't cover very well, ask me a question about it. Gives me another reason to make a video, help and inform everybody. All right. Peace. And for those who stayed on to the end of the video, I have one bonus. Every video will have one bonus piece of extra information you did not expect. And this is what